Welcome to TradeTheMBA.com. This is John Supporters for the 13th. Well, we saw the inflation numbers came through. And they were super hot, which in market speak means that, you have continued devaluation, so got to buy. And, they think that the Fed will be, forced to act in some manner to help things along. Weak unemployment numbers, even though you see the massive shift from regular workers part time and a lot of other factors built into that. But at the end of the day, the reading's still positive. The market only sees good things. The rematch is pretty much set for the election as that was finalized. Um, Everything supported, even from the NQ on key levels. And again, no real short activity at all. I mean, MBI white fading. Same with the DOC. You see positive red DOC rising, shakeout continuing to rise on the histogram. That's always positive when it's above the zero line, and we can see the beginning of gold starting to rise. So it's all good news. The Treasury market unfortunately realized that, the softening of rates was the wrong direction given what inflation is going to do. It'll be interesting. That's got to move way lower before it's going to have any impact on market behavior and taking funds from equities at this particular stage. Oil was a little bit soft, but still holding right in that upper 70 range. Any shock, though, pushing that up is only going to make the inflation thing worse. We knew that this was going to happen. I mean, it wasn't a surprise why we follow what oil's doing in commodities. They're a testament to where things are headed. The real question becomes how much of an impact does it have on the economy, and the market's probably believing that that's going to have somewhat of a negative impact, which would force the Fed to ease even within the rising rates, which seems counterintuitive and would be if you want to stop inflation, if you don't really care, because every time those inflation numbers print higher and higher, the fact that they're spending an extra $1 trillion every 100 days is devalued somewhat. From a euro standpoint, the ECB is talking about cutting rates, or at least that's what they're hoping for, because of the inactivity in the eurozone, which is kind of hilarious, given the fact that this is way outside where the euro should be relative to growth activity, at least from a gold standpoint. Surprising fade back off of the big spike. It's just filling back some positive extremes, supporting on there. What you are seeing, though, is a clear indication from crypto that inflationary cycle, and we're getting to this point where it's almost inevitable that Bitcoin will go to the 100,000 mark. If it gets about 82ish, then definitely it's going to the 100 range. ETH also continuing to push towards its highs, actually making new highs, really. And that's just going to be part and parcel of where you're going to see this bifurcation between regular U.S. dollar-based assets and untethered items, if we want to call them that. From a 50K standpoint, you can see we've pretty much returned all the way back after clearing out a bunch of stops and positive extremes. We created some new ones right in here, right about at that 50%, 5206 range. So breathing room. So you clear out the previous positive extremes and reset new ones at a higher level, and then we'll revisit those as well and go back up from there. And that's just the range of it, and it's still getting pretty decent moves intraday. Test lows, come back, make new highs, fill back in positive extremes, and then run up to the end of the day. And here in post market, they're just flirting with a little bit of testing back and forth, pushing up to new highs, and then coming back and filling it up. So it's a rinse and repeat at this particular stage until something relevant breaks. You can see the difficulties that exist, and within that difficulty, usually you get a rising market because it's the fear trade is to the upside, and that's definitely where they're pushing things at this particular stage. However, that exit's going to become very narrow if there is some strain on the market, either through credit or other avenues, world events. So definitely worth keeping active. And the intraday movement, I think, is still nice. So all in all, We continue to plug away, follow the readings. Pretty straightforward. As always, though, if anything relevant pops up, I'll put it on the Skype chat. Have a good one. Trade well.